By now, I'm sure everyone's heard of the stock market, but how exactly do stocks work? Well, essentially, a stock is an asset in a public company that gives you ownership of part of that company. Imagine if Apple as a company was split into millions of tiny pieces. This is Apple stock. All of these little pieces are called shares. So when you buy a share of a company, what you're doing is basically you're buying a little tiny piece of the company, making you part owner. Nice. Over time, the company's value will rise and fall depending on the company's performance and demand. And since you own a little piece of the company, that little tiny piece that you own goes up and down in value as well. In addition, as part owner, you are entitled to some of the company's profits as well. Here's an example. Let's say you buy one share of Apple stock for $100, since that is the current price. So you pay Apple $100 and they give you a tiny piece of the company. With your $100, Apple goes on to innovate and grow the company, such as creating the next iPhone. They go on to sell millions of iPhones and make tons of profit. And since you are part owner of the company, you are entitled to some of those profits. So if the next iPhone hits the market and Apple sells millions of them, that means the company's value will increase, and in turn, so does your share in the company. So let's say after the new iPhone is released, that one share that you own is now valued at $150. You can now sell that back to Apple for your $150, meaning you would come out with $50 in profit. Not too bad if you ask me. A quick and simple way to make money just by a few clicks online. However, this also works the other way. Let's say Apple creates the new iPhone with your $100, and this new iPhone they release has a tendency to catch on fire. All of a sudden, nobody is going to be wanting to buy iPhones anymore, and Apple as a company won't be as valuable anymore. So in turn, the company goes down in value, and so does your share of the company. It may only be worth $50 now, so now you're at a $50 loss. Ouch. So there's always the risk on whether a company you buy into will succeed or fail. Keep in mind, this just means that the value of your one share has gone down in value. You haven't lost any money. All you have is an asset that has decreased in value. The stock price of the share has the potential to go back up. So you don't lose your money until you officially sell your share back to Apple. But as long as you keep on holding onto it, you haven't officially lost anything yet. Let's say you continue to hold onto your stock even after it's dropped $30. Apple could redeem themselves in the future and grow the company right back up in value again. Their stock price can go right back up and even surpass what you initially bought it for. So now you're back in the positive. That's the reason why stock charts look the way they do. You can see all the good times and bad times Apple has had throughout their years. Just remember, nothing is official until you officially sell your share back to Apple. So the next time you look at a stock chart of a company you own shares in, just remember, this just reflects the amount your share would sell for if sold today. It does not reflect how much money you lost. You don't secure your gains or losses until you officially click that sell button. I know what you're thinking now. If the value of my stock keeps rising and falling, when do I buy and when do I sell? Well, that's a pretty complicated answer, and it depends on what you're looking to achieve and in what time frame. I'll make another video about how to invest in detail, but the common idea is to buy low and sell high. So there's a constant game to play on when you should buy and when you should sell. It's tough to determine whether a company will become a multi-billion-dollar company or file for bankruptcy. But in the long term, most stocks end up yielding a positive return on investment, so it's best to just stick it out and ride the wave. The best advice I can give is do your research and be cautious in what you invest your money in. This example with Apple stock is a very small scale example of how stocks work. But now imagine millions of companies around the world doing the exact same thing. Collectively, all these company stocks are what make up the stock market. This is meant to be just an intro video, but if you want to see future videos in more detail on this topic, please consider liking and subscribing for more. Thank you for watching.